But yeah, let's go ahead and get started. Like I said, this gold position, I don't really trade gold, but I uh I saw this setup and I'm just like, okay, you know what? This is actually like relatively clean. And there's a couple of confirmations that are going my way here, which is we are externally bearish. We have a potential sweep. Yes, there is like a reaction from here, but the reason why I'm even considering the scenario for one, excuse me, is because there is like an internal sweep here, but the internal sweep led into some momentum. But the one thing that prevented me from this making this a kind of like an A plus setup is the fact that we didn't break this. If you would have broke this, then I'm seeing this like as a extremely good setup to where I'm gonna be very confident that we're going here. But the only things that are going against me is one, the fact that yes, there is a sweep, and yes, there is, we're still within the sweep range. But the only thing that's kind of holding me back here is the fact that this still potentially, from the medium term perspective, is still bullish. But I really did like how the internal here gave me some strong momentum. Right, it's kind of just gave me the implication that we're either going to break here. We have an internal push, right, and then that internal push kind of failed, right? But not the cleanest setup. But if you guys go look at that, that actually ended up breaking me even. Where was this? Here. This was the M15, M5. Yeah, here you see. So the setup ended up working out really, really well. The only problem is my validation of the scenario. My validation of the scenario is technically right at the high here, but right as soon as I start to see this kind of give me a move to the downside, I'm like, okay, you know what? There's no reason for this to come back, and I kind of stuck my guns to being break even. But what sucks is that eventually from there we ended up having an internal sweep, high momentum, and then that high momentum led me to having to take this internal high out, and that internal high gave me the break even. So because of that, it kind of just took me out of the scenario. But what sucks is right. This is one of those scenarios that I've told you guys before, that just because something converts one way doesn't mean it can immediately convert the other way again, like from bullish to bearish, bearish to bullish immediately after, because that's technically what happened here. Um, so we are seeing this, and we are seeing this kind of break me even. Therefore, right now we are bullish. Even though we are bullish, right, there is right the internal break here. So this internal break now means that we technically swept equal highs. We swept internal equal highs, and we have high momentum to the downside based on the solidified low there. So this was actually like a re-entry slash true scenario. Obviously, it's a true scenario in hindsight, but um, that just goes to show that my entry, although the overall POI was correct, right? The direction was correct. My execution was not. And the real execution here, this would have been a much better scenario. Why? Because if you then go look at the entire scenario, yes, we have a sweep, but like I said, there is uncertainty with this still being bullish. So if we're only looking at that internal bullish, then we have CBOS, we have a leg, right? And then we have another leg. So then pretty much this move is what confirms potential structural disruption from this internal bullish range. All right. Does that make sense? So this technically is the first time, because we're seeing high, low, high, low, high, low. It's the first time we're seeing any type of high that led into a low be taken out. Therefore, this is a pullback high. I mean, pullback low, sorry. So technically now, once we're breaking that, then we now have structural disruption. All right, does that make sense? Right, structural disruption from the internal sense, right? Um, but yeah, so you guys see my position was right, but my timing was wrong, and my timing was wrong because of the uncertainty. And then even now, as I'm explaining it to you guys now, now that I look at it a week later, it was really not the best entry. So if I was to play it a certain type of way or a different type of way that's realistic, it would be to just hold the POI. Because at the end of the day, like, yes, the internal is technically bullish, but because there's a reaction, that means that this is my invalidation of the POI, meaning that if this is to break, then we have OFD, order flow disruption. So if we have order flow disruption, then obviously I'm wrong. So realistically, right, I should be waiting best case scenario even until here for the to even potentially move my stop. But obviously I'm not gonna do that, right? Like that's a lot, you know, that's like 800 pips, you know, it's like 80 points. So like I'm not gonna do that. So in hindsight, the realistic approach that should probably take the next time is just hold that and just kind of let it either give me an LG, kind of how we talk about only moving our stops with LGs back in the day, right? Or just holding the invalidation, right? So yeah, break even there, not the prettiest setup. I have been looking into like indices recently, and they move pretty well. I'm not gonna lie, they move pretty well, and I'm not talking about NAS SPX. Like this is something I don't understand. I don't understand why everybody only trades NAS SPX, EU, GU, gold. Like I don't understand that. Like who's to like, especially if you're like in a weird time zone, like you'd be surprised how many moves you can get during like Asia, late Asia, early um early London, late London, right? You can really work around, especially from the intraday POV. Right, especially with these like indices that I've been starting to notice. So I've been looking at stuff like this, like the German, and I saw this setup, and I didn't take these setups, right? I did take one setup, and it was a loss, but I'll come back to that. I did see this, right? I just saw this as a super clean, like it's technically like a dual sweep, but it's not my type of dual sweep. I would much rather see like that afterwards, because then there is some type of solidification here. So if that solidified low is taken and then breached, then you know I could potentially justify a dual sweep. But it was very clean, and there was like a very nice closure here on the H1. Whereas if I really wanted to take it, there is a there's a decent entry, and obviously we'd be aiming for like up here, you know. So I saw this and I sent it to my friend, and he was and I was just like, he was like, "Yo, like, what is that?" And I'm like, "This is cool. Like, look at this." And I think it ended up working out. Yeah, you see, like it's still in motion. This is like Monday, yeah. So I was looking at this setup here, and the reason why I liked it was because you see kind of like a false flag here, right? When you see a range and then take out the low and then you go into the highs. And I believe on M5 there was like a decent entry, but I can't take this on the M5. Like I don't think I could justify taking this on the M5. Actually, no, it's the wrong one. The other one. The other one was a good M5 entry. But anyways, the right the H1 ended up being a strong close, and even there, right, for the target that's being sought for, or the target that we're looking for, right? It's still a decent setup. It's not the cleanest like type of sweep, right? It's also why I didn't take it, because it wasn't the cleanest. Because like in real time, like there's a argument for this, right? There's an argument for that. There's an argument for this, right? And what I have been looking at, or the reason why I wasn't like anticipating that to work, was because of the daily. Like look at this, you know, like we've when I look at a chart, right, the number one thing that I want to see is where are the sweeps and what side do they favor. And like so we have a clear sweep here, okay? And then that sweep ended up clearing out highs, so that's complete. We have an internal sweep here, and that ended up completing there, so that's complete. And now we have another sweep here, which is almost complete. So if I'm seeing this here, I have no reason to believe that this is going to be bearish by any means necessary for this time frame, because we have been bullish on every scale, right? Sweep continuation, sweep continuation, even the internal ones, right? Like the internal sweeps here, right? And because of that, I'm just like, okay, well, there's another internal sweep, but obviously that sweep isn't relative to the time frame. That sweep is relative to your intraday basis, right? And so because of that, I'm just like, okay, the daily's super bullish. The internal here, you have a strong H1 closure. Like, if I was to bet on it, like, I would probably assume that this would go higher. And luckily, like, it did. And so I'm gonna start looking at this stuff. Like, the price action seems relatively clean here. It gives a little bit more variety because there's an argument that I go back and forth on, right? And I feel like I get these arguments for you guys like all the time. It's like the balance between the amount of assets, pairs, crosses, etc. that you look at. And I don't know. I couldn't tell you which one is better because there's an argument for both, at least from the unbiased standpoint. Because you could be a scalper and you could trade like 2 to 3 pairs, but there's also an argument for why not trade 4 to 5 pairs if you have the self-control to not take setups that aren't necessarily part of your model's plan, etc. Right. And it's because obviously like the popular answer is like you want to stick to like 1 or 2 pairs, and I've said that as well, but that also is under the assumption that I am very or that I can probably get every single setup out of those pairs, and that's not necessarily true. So the argument now is why not look at more assets? Why not look at more pairs? Especially because I've been doing a lot of more intraday scenarios recently. I've been kind of staying away from like the M1s, M3s. I'm really liking these like H1, M15, and the reason why I'm liking those a lot more is because I'm starting to incorporate like a lot of the higher time frame sweeps. Like let's just say that's why I've been building one of my indicators, which is this one. Right, I've pretty much updated the direction indicator. So now I have like weekly lows, daily lows, etc. And the logic behind that is that if we're trading within session and from the intraday POV, if we're trading, let's just say under the weekly or under the weekly, and then there's like a daily sweep, and then there's a transition on the intraday basis, then it makes sense to hold that for like 2 to 3 days, right? Because I'm looking at a weekly candle being either swept, taken, etc. And if I can match that with like a major intraday direction, then it just makes sense to hold the trade for a little bit longer, right? Because of alignment, right? That like if I'm aligning a sweep on a daily or weekly, and then looking at that and then taking the intraday scenario based on that, then I think I'd be selling myself short if I'm only looking for the scalp target. You know what I'm saying? So a good example of that, like my friend sent me this the other day. He was like, "Yo, look at what you chef just did." Right? It swept the monthly low. And I'm like, okay, bro, like it swept the monthly low, like whatever, right? But it's just like, no, like that has a lot of like meaning to it. Like, not saying that after every monthly sweep, you should like take the opposite position, but it's consistent with the logic that I have. So it's inconsistent of me to not assume this to be important. So, for example, whenever I took that GU scenario earlier this year, which was like over here, right? If you guys remember that, it's because we swept a very major high. This is technically like a monthly high, like maybe yearly, possibly, right? Yearly high, right? But because we took the yearly high and then the daily is transitioning, then the scalps and intradays really fit. So from the same using the same principle, if we're sweeping a monthly low and there's like a scenario, excuse me, right? And then there's like a type of scenario, then it makes sense to hold this. Like it makes sense to, excuse me, to hold this, for a relatively extended amount of time, right? So I'm just using this indicator to help me with alignment, right? Like if I'm looking for a scalp, why not potentially take a position from the H4 or after an H4 low is swept, right? Assuming that we're looking for a different scenario. So like let's just say right now, just looking at this pair alone, if we have like structural disruption, then okay, like I'm aiming for here, right? And that's like an intraday setup because we're on the M15. So even if I find my entry like on M5, it makes sense to hold this a little bit longer because we're sweeping a monthly low, we're sweeping daily lows. Um, there's probably other confirmations, but I'm just trying to point my point across, if that makes sense. So I've been building my new indicator now, and I added this stuff just for fun. I just thought it was cool because also my friend used it and he wanted and I saw it and I just found it to be relatively like effective. So I'm like, you know what? Let me just code it. And so I coded it, and compared to the V1, I actually don't have it on here, but I actually split up. I actually split up. If this wants to load, there we go. I actually split up the time frames now. I don't want to categorize the the time frames into a structural level because after I've been doing my research with like solidified points, etc., I have been looking into um I've been looking into seeing if I can maximize efficiency of solidified point levels per time frame rather than focusing on just a level because that level is subjective. Like major intraday can be major, like let's just put it like this: major intraday, major, minor. Based on the asset, the time frame for these two, right, can be different. It can be different. Why? Because like let's just assume solidified points. If solidified points are built based on the it's based on the current price action, right? Because obviously the first level, right? Based on the first level, like this should be a level one low, right? And then once the level one low is to be broken or something like that, or invalidated, sorry, transition, then that becomes level two. Therefore, it's an emergent process. Therefore, it is it's bottom top, not top bottom, right? If that makes sense. So therefore, if it's bottom top, then by the time you start reaching these like daily time frames, unless they are directionally extremely aligned, then it will not be the same, right? The same level for if we were to assume level two, level three, level four, or let's just say M15, M30 was to be a part of the minor intraday. On one time frame, it could be the major intraday, and I mean on one asset it could be the major intraday, and on one asset it could be the minor intraday. So it's not consistent, and if it's not consistent, I can't make it make sense for myself. And if I can make it make sense for myself, then I can't make it make sense for you, right? Because the logic before was just it's kind of based on a little bit of assumption, and it was assumption that I didn't realize was assumption. So I want to break that by maintaining maintaining each individual bias based on the time frame, and then therefore if you have a certain time frame you like to play, then I just think that it's better to play based on the time frame that you're looking at or that you like to look at, right? And right, so I've made changes to this. Um, for the people who already have the indicator, it'll just be an update. I just gotta change a couple of things, like for example, like the monthly, like it shouldn't show the weekly and like the H4 on that, you know. So it's just an easy setting I just gotta change. But outside of that, everything is kind of relatively done. See, like here are the time frame slots. It's only for the time frames that are shown in the free version of TradingView because I can't add like the 3 day time frame on here or like the 2 week time frame on here because if somebody doesn't have the paid TradingView version, then I think the indicator could break. So I just keep everything settings wise to what's available in the free version, and I don't think that's a big issue because like, what do you need more than like all of these time frames here? You know, I don't think you need that. Like, if you need the M10, okay, bro, just use the M5 and the 15. Like, it's really not that deep. Um, but yeah, everything is kind of there. I have like a bunch of levels, like high of day, low of day, H4 high, H4 low. Today's daily open, daily high, daily low, daily close, yesterday's daily close, the new week open, weekly high, weekly low, monthly high, monthly low. Right. And I just think this is it's more to just give a little bit of clarity. And for example, like if we're sweeping a monthly low, like and you're looking to sell, like it might not, it more than likely probably won't work out, especially from a scalp POV. You know what I mean? So if I'm able to see this just clearly on a chart, then I think it can help. You know? Hey, what do you guys think? Mm. And yeah, it's actually all a part of. So it's all based on the previous closure. It's all based on the previous closure. So if you guys see here, like we just had so this right here, you can see this is where the uh I'm sorry, here, this is where the H4 closed for the previous one. So it's based on the last closed candle, right? Based on the last closed candle. But yeah, I'm working on that, and then I'm working on solidified points. Right, this is kind of done too. I'm probably not going to share this. I don't know. I don't see the point because I'm not going to give this code out. I'm never giving this code out. And um the point of this is to now hopefully begin to see the relationships of what is considered a concept. To put like cleanly, this is a structural range. Okay, so like can I either based on like I'll go look at like maybe 20, 30 examples based on that, can I either figure out the potential patterns as to what level is this on different time frames? Because obviously, like if we're looking at this alone, let's look at this here. Based on that alone, on what time frames, what levels is that? See, it's a level one to level two on M5, but on the M15, it's a level zero. It's actually level zero. I don't have level zero shown. But level zero to level one, and then beyond that, you probably won't see much. It's a level three to a level zero, right? So based on the relationships, can either I or AI find the relationships as to why this is considered a structural range that's of relevancy right now, assuming that price isn't, done right? Or can you figure out if, let's say, maybe this is a more relevant thing? Like, is it going to be level three to level two, level four to level one? Because it gets pretty interesting. Like, for example, if we go to like the M15 again, right? At level two to level three, once that breaks through, that is technically a buy to sell, right? So if that's a buy to sell, then I can maybe figure out whether it's either always level two to level three or what other time frames show this type of relationship. And I think I'm gonna find a lot more success with like the internal time frames because there's more levels, so I can probably find more relationships. So if there's like an M5 or M15 2 to 3 and like a M1 or like a M3 level 4 level 5, then maybe on the smaller time frames, if there's a level 4 level 5 being taken, then maybe that's a POI on the M15. You see what I'm saying? So I could probably base it all on like the smaller time frames. You see what I'm saying? So this way I can start to code the stuff and I can start to make like a scanner for my stuff. Because really where I'm gonna like what I'm the most excited about with this is making a Fibonacci like like a Fibonacci model out of this. Like, can I establish when an LGC occurs or an SD occurs, and based on that, fib, and that would make my target, relatively easy to find and easy to code. The hard part is going to be finding the relationships between solidified points to show me whether or not this is a valid SD or LGC. But yeah, but because it's relatively easy because it's an LG, right? Which LG is easy to code, but it's hard to figure out the relationships that consider an LG valid to trade or an LGC or making it valid as a LGC slash SD, right? So that's kind of what I'm working on there. Trying to make solidified range SRs based on that. If it can find any. I made this last night, like I haven't even checked it. And then POIs is something I'm working on too. Yeah, they're both broken. I guess they don't. I guess they don't work. I'll have to fix them up later. Something's wrong. I think it's looking back at too many candles. Yeah, probably. But yeah, I'm trying to make POIs. It's fucked right now. Don't look at it, but it's bad. But um, yeah. Anyway, well, I'll work on that, and and yeah, if I can really figure out the solidified points thing, I think that's my route to trying to potentially code any type of style, if that makes sense. I can probably code almost any kind of style if I can get the solidified points down on the smaller time frame. You see, because on the smaller time frame, stuff is a lot more clear. And what's cool is like this is also it's in like I said, it works in real time. Like you see how right now there's no level one. You see? So once a level one breaks, then pretty cool. Once a level one breaks, level two is created. Cool, right? But yeah, that's that. That's the little rant for that. Um, I think I did have another scenario. Here, this is the UK, and then I was looking at the indices. This is the second scenario that I was looking at the UK. This is the reason why I really wanted to look at indices. If you go look at that one was actually a really cool little setup. I'm not gonna lie, that one was a really cool setup. Oh shit. Really, really nice. You see that? Very good setup because this is a proper dual sweep, proper dual sweep. So internal range is bullish, right? Then you sweep once, dual sweep engulfing. And then this is one where I was looking at where this could have been a really good setup. I'm not gonna lie. This could have been a really good setup. Look at this. Where like I know that if I was looking at this on like M5, like once this breaks, like I'm taking this whole thing. I don't care. I'm taking the whole thing. Like I'm taking the whole thing. If I was to actually trade this. And I was looking at it and I'm like, do I take it? Do I not take it? I'm like, I don't know, but I didn't take it. So really nice. This one was really, really nice. Like when you see this and then the internal sweep, and then there's a bullish POI, bro. Like what? Like this is bullish. Like there's a POI. Like, bro, this could really swing up to like here. You know what I mean? And the reason why I'm taking the whole POI is because of alignment, because I don't want to over refine this, because I just want to make sure I get in and I want to make sure that the setup is valid. And so there's a dual sweep, and then there's a very clear transition here. So because there's a very clear transition here, like look at this, like this is already like a 1 to 5, but the goal is like because of the alignment aspect, like to hopefully like hold it away to here. You know what I mean? So it's really cool. Like like this stuff moves, right? Like this stuff moves, and it's an indice. It's an indice. Therefore, there's more volatility compared to FX. Because the problem that I hate running into with FX is like if I ever go through like a losing streak or like a bunch of break evens, like the commissions will add up, or like the commissions add up. They will add up to like a couple $100 once you start to scale, you know? Especially because most brokers charge like anywhere from like 7 to like $20 for commissions, depending on the type of broker and if it's a scam or not. Mm. But but yeah, this is really cool setup, right? Like, do you guys see this? Do you guys like this one? Do you guys see why I'm saying that this is a really good setup? This is the whole point of like trying to trade the sweep is like if you see an initial transition, right, or an initial move to the upside, then this is the trap. And I don't want to call it a trap. I hate calling it a trap because it's not a trap. It's just this is just a CBOS externally, right? So it's not a trap. It's just like this is CBOS, therefore we should anticipate continuation. But it's until you see potentially stuff not continue, that's when stuff begins to change. Because just like here, this move here where we have this break. Yes, there's like a bullish setup here, but the TP is there, right? Why? Because this is still just CBOS based on this here. based on that there, right? Like it's still internally bullish. So that's why I like the dual sweep, because after, right, the dual, right, if I'm seeing this slow down, so this is slowing down on the higher time frame technically because it's solidifying the range. Then on the medium side, on the internal side, it's slowing down slightly, but you're still bearish. But then once that order flow completes and fails, that's why the dual sweep is so effective. And this is the one I'm most excited about, like coding, because it's the same thing, just like based on 3 dimensions. Because it's one here. It's first it's a external CBOS, then it's an internal unsubstantial new low, but more than anything, right? This is still internally bearish, so it's pretty much the external CBOS, the internal range is still technically there, right? And then if this is to have a level 3 or the internal, which is technically level 1, right? But if let's just say this is H1, M15, and then M5, right? If the H1 has an external CBOS, the M15 has a, let's say, give or take a minor sweep, but is still technically bearish, right? Then if the M5 has this type of transition, which you guys know, like I really like the engulfings, I really like these momentum moves, right? Which I've been trying to test another theory with that, which is if engulfing like engulfs like 2 candles, like it's really really valid. I've been noticing that recently. But like here, like if you go to the M15, see, like let's say we were to take this, shit, uh, there, right? If we're to do that, like let's see what the direction is looking like. And it's a weekly low. Okay, that's also a good thing. Weekly low, daily low being swept. Exactly what I just talked about earlier, right? M15 bearish, right? M5 is bullish, right? And H1 is still bearish, right? So in order for this to, let's say, be a conservative setup for, oh shit, wrong one. When does this transition on the H1? Let's see. It probably won't transition on the N1, on the H1. Sorry. Oh yeah, I would have to break this. No, never mind. It probably won't work out. Okay, but yeah, it's still going to be relatively aggressive on most time frames. But it's only until it transitions to bullish. But you can see the externals bullish, and actually, I'm probably going to toggle off this. I don't really care for monthly and weekly direction. I care for monthly, weekly candles, not direction. 2 different things. But yeah, you guys see what I'm saying here, right? Like with the monthly, weekly, daily stuff. Like if that's sweeping and there's a setup, and I mean this is technically in London Open, but I haven't tested when these move. Sometimes the fact that an engulfing closes within the range, it depends on what you're talking about, bro. I like, for example, the engulfing here, I think it was on M15, M30. Yeah, there was a good engulfing there. Yeah, so like here it's just like literally anything here, like even this is valid based on the scale that we're looking at. Like because why? Because this is the high that led into the break of the weekly low, right? Even though there's 2 internal pushes from the H1, this is probably just one push. Yeah. What do you mean by struggling, bro? Trying to combine unwillingness with structure and waiting to show its hand. Because that's, yeah, exactly. Here's the thing. In order for you to take a daily swing continuation, the internals will probably be going against you. They have to, bro. If not, you'll have to wait for this to break. And then for this to be your target, like, the risk to reward is not going to be there. So it's like a if this then that thing. So like if this is to happen, which is this, then this is then confirmed to be a dual sweep. And if that is confirmed to be a dual sweep, then we can continue the daily time frame. Like those are the types of relationships you have to combine. And it's not if this then that, it's if this then this, then maybe this then that, right? Just add complexity to it. And if you could start to like kind of put that all together into alignment, then I think it'll work out. Whether it's the N15 and 30H1, strong momentum is building. Yeah, you're gonna have to show me an example on that, bro. But yeah, and then see, obviously here, this would be a monthly high, and that would be a great target. But obviously, by the time the daily converts, or let's just say by the time the H4, I think the H4 is still bullish, right? But like, let's say if the H1 is to convert, right? Let's just say here, which this already did convert, right? It already did convert. Yeah, it did. See, because it broke through the high, right? So because it broke through the high, like if you're gonna take a setup to the monthly high, you're gonna now have to find alignment somewhere. So therefore, I'm gonna need to see a sweep somewhere, and then a transition, and then now I can aim for here. I'm not just going to look for like this. That's too simple. No, why? Because I want the creation of a move, not the continuation of a move. This is the creation of a move because you're sweeping, you're taking liquidity, therefore you're creating a move, right? So if you sweep liquidity, you have a transition, then you're creating a move. And then this is trying to continue the move. And I think this is where most people fuck up. I like most people want to catch like this. No. Like theoretically, yeah, duh, but it's what happens here. It's like, okay, lit. Now we have the creation of a move because you have a sweep. And now I can align that with the external. So if you can have this happen like on multiple time frames, like that's cool. Feel me? Like you shouldn't be pursuing like a 70 here unless there's like a transition on like M5 through M15, right? Like it gets all transitions. It's all transitions. But yeah, that ended up working out. Pretty cool move, right? Pretty cool little sweep. Then this was yesterday's trade that I took. I saw a lot of people take this. This is a great trade. This is a great scenario, guys. This is a even though it broke me even, this is a great scenario, guys. Let me show you, and let me show you guys why it messed up too. Oh, what the hell? Here, this is a great scenario, guys, and I mean, like, the reason why I call it a great scenario is one, this gray line is the monthly low. So because there's a monthly low, we're trading beneath last month's low. So if we're trading underneath last month's low, yeah, we're late into the month. Sure. That's actually like that would be like a great point as to not worry about that. Like you should, if you're under the monthly low and you're transitioning, like let's say before half of the month, then it actually has like a very high probability. Like just, if you're common sense it, like, so therefore, if it's late in the month and we're below the monthly low, then for it to reverse, you're going to need a lot. And if you need a lot, then you can't really anticipate that. But we're underneath that, right? And once you start to go deeper, right, you're seeing that there's an internal sweep here too. And let me actually go back to yesterday's PA because you can see yesterday's low and stuff. Yeah, you see. So the prior day, right? If you look at this, if you look at the prior day, um this was Tuesday low. Tuesday low was swept, right? And because Tuesday low was swept, right? And then from there you transition, right? See here, once there's a transition here, this is the first inclination as to why this could be bullish. And if I wanted to be like just conservative, like bro, this is great. This is great. If I wanted to take a long-term setup, that's great. And it could probably still even work out. right? But obviously, you know, I can be a little bit greedy, so I want to see my internal transition, right? But this is from a swing perspective, this is great. Why? Because there is a very clear sweep here, right? And you're sweeping a daily low and you have high momentum. So perfect, just like that, just sell to buy. Okay, great setup. That's a great setup. And then you can aim for like really high. Assuming that the monthly goes your way, right? Meaning that you start the monthly low and that it's going all your way, but you're also underneath the weekly low. So like, you know, like there's potential for a very big move that could you could hold this for like a couple of days, maybe even weeks, right? Because that's the cool part about weekly lows and monthly lows, right? And so from here, it's like, okay, so now we have the new daily, right? But we already swept Tuesday's low, so that's important. And then so we're coming back into the POI, and then it's until I see that, that right there. Perfect. That's here. Right. Once I see that reaction, I'm like, you know what? Just take it. Fuck it. Screw it. We'll take it. And why? Because this is what I'm talking about. Like, I love when an engulfing takes up a lot of candles. I think that's really good. Because that shows high momentum. It's another implication of high momentum. So if there's high momentum, then okay, I'll just take it. Like, why not? Right? Is it LGC? Not necessarily. Not yet. Not yet. Not yet. Because this is CBOS technically. That's a range. So this is CBOS. So it's aggressive from the internal, like the internal POV. So as you can see there. So I'm relying on the high momentum and the engulfing to outperform the internal bearish range. That's what I'm betting on. And this is kind of what I mean, where you like something is gonna always go against you. Like just there in every single scenario, because there's like 10 to 15 levels, things will usually always have something going against you. Uh yeah, you see, so great move, and it gave a great reaction here. And there is even another internal transition here. And this internal transition, like this is what would invalidate, right? Like this here, right? This is what pretty much means that yeah, you're not gonna reach here. So this is like your A plus. And then from here you can obviously aim for this initially. So I did take a partial here, and the what sucked here is where is it? Where is it? Ah, here. This is structural disruption. So I consider that structural disruption. And I almost sold today. I almost did, but I didn't. I don't really like taking trades on Fridays anymore. But this is a great scalp setup. Right? Like this is a perfect like little fib setup here. Yeah. See. Um but yeah, so the only thing that I'm going against this is because from the big point of the big POV, the higher time frame POV, like I'm still technically really bearish on this. Yeah, I mean most internals are still bearish, but that wasn't the case earlier. But the reason why I'm still bearish on this is because there's a very clear range here. So because there's a very clear range here, even though it's externally bullish, if I want to see this transition, like I need to see this swept. It's the same thing as like Bitcoin. Like I've seen a lot of people like get into that, and I'm just like, okay, like hey, look, like we're finally transitioning here, boys. Like we're fine. Like it took a while, right? And then people are trying to tell me, oh, like this and like this. No, bro. Like just bro, there's a very clear range here. You're in a pullback. Now it's just a matter of, are you gonna reach the buy to sell? Are you gonna reach the 70% retracement? Are you just gonna retap structure? Like, you know what I'm saying? Like if there's a very clear range, like you should probably consider that. And you can see here very clear range, very clear. Like if we're bullish, this is very clear. You know what I mean? So like I've been anticipating this to go lower for like a while. Like I have a chart. I need to go find it, but it's from the H4. And I've been bearish. Yeah, here since here. I've been bearish since here. And did this hit 70? Oh, that's crazy. No, it didn't. Sucks. Oh, pretty much like on the dot. That's crazy. And that's why you see I was bear. That's why I was bearish last week, if you guys can see here, because of this exact like scenario. Because there's a sweep here, and then there's a move here. I actually didn't review that, but oh, you guys can probably see that sweep here, and then that's why I was looking at that POI because this is a transition. But yeah, I've been bearish on this for a while, and it's just like the same as Bitcoin. Like I've been bearish on that for a while because I know if we need buy to sell and sell to buy, then I know that if I want to buy back to the highs and we've already failed to break higher, then I know that we need to sell to buy. Oh, shit. That means that we need to sell to buy. It's just like common sense. I don't know. All right, but does that make sense? All right, so it's just the same thing across the board. Like, and most people already know this stuff. They just don't add the complexity to it. Everybody knows what a trend is. Everybody knows what liquidity is. Everybody knows for the most part, even like SMC and like stuff like that. Like SMC, honestly, if you trade support and resistance and you could just add complexity to it in terms of like trading a support and resistance on a support and resistance on a support and resistance, bro, you'll be fine. Because one frames the bias, one tells you to look at the chart, and the other one tells you to execute. Like, you know what I mean? And it doesn't matter. It could be these, or it could be these, or it could be these. But understanding the relationship is like hard because it's different per asset, right? Like because the movements of every asset are different. Mm. And that gap of judgment is what makes you probably take trades you shouldn't be taking. Right. And then this is one setup that I was looking at taking, and I really liked it. This is like a 70 continuation. Um, but this one failed on me horribly. This one failed on me horribly. Why? Because we're bearish. We're bearish, and I'm fighting that. So this is like I'm right on the direction. I'm just wrong on the timing. This is a good example. Like even though there's like a great engulfing, right? If I have like ranges going against me, then it may not work out. And you can see here. Yeah, exactly. And but like the thing is, if you wait, then like you might miss it. That's like the problem. Yeah, you see, like this is so annoying. I hate. Actually, I'm pissed now. I'm seeing this. Um, because trading this is like the same principles as like Nas SPX. If it's always gonna be bullish, then bro, like just like the issue with me trading Nas and SPX is that they move too similarly. So you have to really use like asset divergence slash S&T on those. Uh, but like with these, it's like look, they're actually moving completely different, even though directionally they're still relatively consistently up. Um, assuming economy doesn't crash. But yeah, you see this like, oh, I'm so mad about this actually. Like if I would have just taken the 70 itself, like this would be working out. And see if I would have waited for the transition, like I would have to take the whole POI, and I don't know if it did tap it or not. Yeah, I did tap. No, it didn't. Actually, no, that's crazy. It didn't tap. But you see what I mean? Like this stuff moves cool. So I'm gonna start looking at this stuff, and I'm gonna just test the belief. Like, can I take less setup? Can I take more quality setups in exchange for looking at a bunch of other assets? Because who cares? Like, yeah, things will have different behaviors. Stuff will leave equal highs, equal lows, or like something will sweep more, or some will do deeper retracements. But at the end of the day, the models are usually kind of consistent across the board. You just gotta either know exactly what you're looking for in terms of I want to only take this if there's like 2 to 3 dimensions supporting me, whether it's like an external bias, internal framing, and then the execution, or um I can try to learn all these pairs, but I don't think that's necessary, especially once you're a couple years deep. If you already know relatively what you're looking for, then focus less on adding things, focus more on knowing when to not take a trade. And if you see a reason why not to take a trade, then just don't take it, but then start to know if that is good or not. Right? Like with the gold thing, like how I said that it's not an LGC because this is still technically bearish. Like like that reason alone should be a reason why I shouldn't take the setup. Why? Because realistically, this is the real scenario here. So that means that in the future, if this is not present, this will lose. You know what I mean? But you just have to you have to like know to recognize that stuff. And it's literally all solidified points, bro. It's all solidified points. And just seeing that as an LG as a as type of LG, sorry. Mm. But yeah, that's that. Let's look into cohort 2 real quick before I get into case studies. Shit. But yeah, I'm looking forward to seeing a couple of you guys on here. I know some of you guys already signed up, and want to make something clear too. If I catch another one of my free members like trying to like poach things out of my premium members, like I am gonna ban you. Like I'm just not trying to deal with it. Like I do enough for free, and then you're trying to harass my members. Like please, guys, don't message my premium members. And then for the premium members, stop adding people. That's why I block DMs. Like save yourself the hassle. Like I know exactly who's been doing it. And like I'm just gonna leave that warning because I don't want to worry about this stuff. Like I got bigger things to worry about than people trying to leak my content. I don't give a fuck about that much anymore. But the intention of you doing that just shows me that I shouldn't have you in the group. No, you're just a bad apple. Mm. But anyways, cohort 1 was everything solidified point, all the basic concepts, right? Solidified points, structural ranges, etc., etc., etc. That went pretty well. I think I could have done a couple things better, and I'm going to try to do that better for cohort 2. So cohort 2 is everything models. Like I want to talk about every single model. Like I'm going to probably review quickly like solidified points, just like the definition. I'm not going to go into examples. Because everything is built on top of that. But I do want to get into this, which this, um if you have the sweet blueprint, this is kind of like where you can prepare for this. I'm gonna try to bring in new examples, but relatively is like kind of what's in there in terms of manipulation theory and like buy to sell to buy. And then we want to talk about all the core models, which is like LGC, SD, OFD. And then we'll probably talk about like models within models, which is like let's say you could probably trade like an LGC within an LGC or OFD within an OFD, etc. And then I want to talk about all the sweep models, which is traditional implied CVD, right? Traditional sweep is sweep plus model. Implied sweep, I haven't talked about that in a while, but it's like using the engulfing. That's kind of the difference there. Um, and then CVD sweep, which is like CVD divergence and sweeps, right? And like engulfings. Mm. And then unwillingness and dual sweeps, etc. Right? Dual sweep is one of the implied sweeps, but I just put it there. I put it there because it's like my favorite sweep. I think it's the most consistent um, sweep out of all of them because it's by default like internal, external, like multi-dimensional. And then just some add-ons, like some nuanced stuff. Anything else I can add on there? Like what are some great confirmations? Blah blah blah. Um, And just like the first one, live session, you get the replay, and I will make a document over it. All right. So $100, it's not expensive. Like it's not bad at all. Like, um, but I think this is much better than me making a whole nother course or me making a whole nother book. Because I get to actually speak about it, and it's I think I like this structure a lot better. I just need to get better at actually executing it. But yeah, if you guys are ready for this, just click the link here. And this will be next Saturday. And I pushed it an hour because there's the Champions League final, right? So pushed it up an hour just so that can end and then we can start. But yeah, any questions with this? Any questions, concerns? I also haven't talked about ASIV in a while. Uh, but any questions on the cohort, guys? Anything? Actually, I don't want to show my login. Hold on. I have a lot of accounts actually. Like, uh, I moved brokers recently too, so these were like my older accounts. Right, these are like my older accounts. Right, these are like all the older accounts, and then I have some other cool ones, like some client accounts. These are cool. These are some client accounts that I was tracking. Uh, yeah, this one was a cool one. This is like a really long term one. This was a long term one too. Um, but yeah, then I have another page. My actual, the ones that I'm actually trading now. Uh, there we go. These are like the actual accounts we're working on now. Um, yeah, I'm gonna start working. I've been working with this broker because it's a good friend of mine, so I get like really good benefits. Um, let's see this one, pretty cool. Mm. But yeah, we're definitely we've been moving a lot on this. Pretty decent, right? Like 6% in a month, not bad. And in the main. But yeah, any questions about the cohort, guys, before we get into case studies? Any questions? The third, models, pretty much I'm gonna try to fill in the holes from cohort 1 and 2, trying to put everything together, putting concepts together, maybe learning how to learn. I do want to, like, I don't know if you saw the in the cheat sheet, there's a, I forgot what it's called, but it's trying to measure your profile as an individual, and if you do that, then you can learn how you learn, and if you learn how you learn, then you could practice better habits for yourself, right? Like some people are visual, some people are text, some people have to memorize everything, some people maybe have to see like a demonstration. Like it's there's a lot of ways that people learn, and so I want to fill in the holes. Cohort 1, cohort 2, and this one's interesting. Like I don't know, I might not even charge for this one. I was thinking about that the other day. Like, Made some progress. Let's go. Okay, that's good, bro. That's good. Excuse me. But yeah, no questions. No questions about that. Let's see. Are there any case studies?
Mhm.
My Discord app has been messing up. Yo, some of you guys are so lazy, bro. Just put in the link to the chart, bro. It's just don't be so lazy. Um, like I don't know. That's annoying. Just put in the chart in the put in the chart link, bro. If you don't put the chart link in, I'm not opening it. Okay. I'll come back to yours, Mike, here in a bit. Let me see. Don't like this one. Yes, bullish, but this is alerting. So because that's alerting, then this is showing bearishness. So therefore, the order flow is still technically going down. So I don't like that one. I would want to see like I don't know something more to tell me that this internal may not be working because of how strong the move is. Yeah, I see like you're seeing the reaction. Maybe if I saw some more of a reaction, maybe it would look a little bit better. Yeah, that's cool. See, so this is also what I talked about earlier, where I don't like some setups. But if you do wait for the whole thing, then it may not work, or it may not give you the entry. So this is good. The good thing, the best thing about this though is the invalidation. Like that's probably the best part. And as long as the invalidation is there, technically your POI is this, and yeah, if I would have hopefully seen something like this, and then maybe a break here, then obviously I would maybe potentially take that, but then the risk to reward doesn't make sense. So it's good. I just don't. Um, I try to think of setups as like if I were to see the same scenario again, would I play it? That's kind of how I try to judge these setups. Okay, someone else. All right, sure. I don't care about a 3-pin pattern on the M5 when this sweep is here. You're talking about like an M15 sweep ish and like an M5 3-pin. I don't care. I don't care about that, bro. I don't care about that. Yeah, bro. Like you're you're focused on the external, but you're not focused on the internal being bullish, and you're focusing on then the entry. So one, two, three, like you're focusing on one and three, and you're not focusing on two. Because it's obviously like the external, the internal, and then the execution. I think that's the better way for me to put it too. Like instead of internal, I just external, internal execution. But yeah, you're focused too much on level three. And like, don't get me wrong, like this is like a decent transition for an execution. I honestly I wouldn't mind that at all. But the problem, because it is technically SD, but the problem is like the structure's still bullish. So if you want to trade a proper like SD, then I mean that's technically like an internal range, high to low, high to low, high to low. I let's just assume this is like another high to low. Then if this is to break and then there or something like that, that's a proper SD. Like, don't focus too much on this. Focus on the opposite when you're looking at the pullback. But no, this is not a good setup, bro. Not a good setup. You again, you're picking highs here. Picking highs here. Sorry, picking. Yeah, you're picking highs internally. So external, overall external bearish. Yes, you have a sweep, but this is super high momentum, bro. I would hate to fight this, you know. And like, yeah, you have technically like SD, but like, I'm not anticipating this to go all the way lower unless like I see the transition here. So if I see the transition there, then I think maybe that could make a little bit more sense. Because then this would be your TP1, and then you'd be aiming for here. You know what I mean? And if you're aiming for here, then you're looking at like a 1 to 12 risk reward, meaning maybe something's wrong. So like, I would need to see like a transition maybe, and then this would be like like a much better ratio. Like yeah, the setup is good. I see the idea. It's fair, and this is not OFD. Your OFD has to be based on the scenario that you're looking at. You because bro, I could easily say there's OFD here, but I'm not trading against it, and there's no POI here. Yeah, the OFD has to be relative to the time frame that you're, or the even the time frame of your execution. Like, is there an example here? Mm, no, I don't see any clear example. Yeah, you see. So you're focused. You're not focusing on the momentum here. The momentum is bullish. Therefore, if the momentum is bullish, right? There's internal ranges. Uh, whoops. Internal ranges, internal range. So it's until we see this that we see SD, right? So once you see this, okay, you know what? This is like an entire POI. This is a refined POI. Okay, this is justified. That's justified to go lower. Um, and then obviously, like if we're seeing this is another POI because obviously the external still technically is bullish. Then right, if you're seeing like this big engulfing here, like it's just this scenario is like cooked. Right. Zoom out, bro. Zoom out. There's too many. Like, there's no clean price. Like, yes, this is clearly going up, but there's so many wicks, candles, messy, messy, messy. That's why I've been staying away from this pair. I haven't been looking at this pair much. Okay, sure. Sure. I'm not opposed to this sweep because you're trying to force a continuation. That's not bad. Invalidation is off here. Once again, I don't know what. So you're using an M1 OFD on an M5 scenario on an M15 bias. You know, like let's try to make that make some sense, you know. And two, this is bearish, so I want to see in the pullback the ranges. Okay, this is the first time that broke. Now this broke. Okay, then I can only be bullish until technically there from a conservative POV. Um, so you're disregarding the moment. You're disregarding momentum in general because you did the same thing here. You're disregarding momentum, and momentum is one. It's like one of the most important things. Like I think everything foundationally for my style is solidified points and momentum. If you can understand those two, you can build on either something that I do or something kind of like what I do. But if you disregard one of the two, I think it's cooked. Yeah, and so like if you were to want to take the scenario again, like your invalidation is here, bro, like down here. And either way, this is not valid as a buy, in my opinion. The OFD is just a reason of CBOS. Like, let's see. Okay, next. Oh, it's not it's repeating them. Oh, that's kind of whack. All right. Nice. I like this. I like this. I like this. Why? Because yes, there's equal highs, but who cares? Uh you're bearish. There's a sweep. There's a potential sweep there too. Internal sweep. This is good. This is good bias way. That's fine. I'm not opposed to that, but bro, just don't be greedy. Like, don't be greedy. If you're trading $100,000, trust me, that will not make a difference. Hmm. Wonder what this result. Yeah, you see, just don't be greedy, bro. Like, this is great. This is amazing. This is a really good setup, bro. But just don't be greedy. Like, just use the invalidation, bro. That's why it's there. Like, I would hate to see this invalidate you, and tap this POI and then like go, because I know it's happened before. You know what I mean? The setup was perfect, bro. The setup was good. This is not a risky setup. That's a great setup. Nice. I like this. I like this. I like this. So you see there's, transition there potentially. I just want to see the internal transition. That's good. No, yeah, not bad. Whenever, so you see, so here, whenever there's no like LG and I take a scenario like this, I want to see once this breaks, like I'm just gonna go break even. Because since there was no LG, like that means that to me, potentially, like if this is starting to fail up here, then I'm cooked. Nice. Yeah, it's nice. That's nice. So yeah, you see, that's a good example because did you show me the full thing? Ah, you didn't. So like internally, you see how it never came back? Um, shit. Yeah, here. So you see it didn't come back. So once this fully breaks, and if it breaks the momentum, I'm going break even because if it's gonna come back to my price point, it's cooked. That's why I'm saying like go break even there. Maybe that's like an intuition thing of mine. But when I see a scenario like this, especially because you're catching that sweep, I need you to note that sweep. This sweep is important. This is the most important thing of this setup here. I think this is the most important thing. Yes, you're tapping structure, but the structure is for the external bias. This liquidity being swept here is for the internal. And then the execution. I don't know why you took the execution, but as long as there's like a reason for it, because there's no sweep, right? So I mean, I guess as long if you tell me it's the engulfing here, then that's fine. If the engulfing is the reason to start looking for entry, then that's perfect. That's fine. Yeah, the momentum. Yeah, that there is perfect. That's perfect, bro. Yeah, so you see it didn't come back. That's great. So you see once it starts going, it should not come back, bro. It should not. It should not. Because think about it, you just cleared big liquidity. So you cleared one way, so you have to go the other way. And if there's volume in the market, then it's just gonna go. But yeah, that's good. That's good. This one's choppy. I don't like this one. This is the one I don't like this one out of compared to the other ones because yes, like you could say this is meant to take us lower, but you're disregarding the engulfing there. And also like remember what I told you guys, three things that can happen. Um that it's you either have a trend, a consolidation, or a manipulation. Like this is a very clear V. So you could have a line, a box, or a triangle. So nah, yeah, you're no, this is big. Big candle, no thank you. If I see this big candle, I'll execute maybe after this. And then I'm aiming for like these lows. potentially as one, and then holding it for the next. Where's your, hold on. It's different time frame. M5. Hold on, where is this? Hold on, where is this? Am I tripping here? Oh, here. Yeah, you see here. So once that breaks, then maybe I would have looked for an execution. Yeah, you see, and then this is the same setup as I took. Yeah, that's good. So yeah, internal, you have to take a partial at TP1 for sure. I definitely you have to here. Um, and that's fine. You close there. That's okay because of this. It's fine. Well, your invalidation is wrong, bro. That's why. It's just not an invalidation. That's just this. That's just a low. Your invalidation is here, bro. Because if this is bullish, you have a sweep here, okay? Then you have a low into a high, then this is the invalidation. Yeah, you see? So like if I was to take maybe the 70, then this is TP1. Or actually TP1 would be at the high, right? But then you have OFD here, so I would just exit there. But yeah, like for example, let me see, is this considered LGC? Yeah, you can consider this LGC here, technically. Consider that LGC. Then that's why the 70 would work. There's a POI at discount where I don't know. I just consider this guessing. I would consider that to be a guess. But yeah, yo, whoever this guy is, next time don't be so fucking lazy. Like just send me the link to the chart. I think it's easier that way. Um, yes, this is good. That's good. That's good. That's perfect. This is a good SD. Technically, like here, like you see we're bearish, and then there's high, this. Um, again, then there is a continuation to the downside. But then internally, this is the POI. So then you have this. So that's good because if this, then SD, and then if SD, then this. Um, but yeah, either way, I would have probably seen this as a good. Yeah, okay, you did use it as a target. That's a good target. Yeah, that's fine. This is a good setup. Some improvisation, but it's following rules, so fine. Okay, this is good. The sweep is kind of dictating everything there. Nice. LGC, that's fair. Yeah, it's fair. Um, CBOS, that's fair. It's good. Um, then the S, this I would consider this also aligned with the LGC though. This here, so like you see how you're confirming that to be the LGC, then this is an LGC as well. If we're referencing this, and then we're referencing this. So yeah, this is good. And then obviously, like I would take a big chunk there because that's already like 1 to 3, 1 to 4. Um, but yeah, that's good. That's fine. Ugh. This one I would consider this more of a lucky scenario. This is bullish, bullish. Yes, there's a sweep. Yes, there's a this. But because you have this POI and the fact that it reacted, I consider this to be now bullish. So I would have less confidence in taking this scenario. Like it worked out. I would have much less confidence with that. But the argument then against what I'm saying is the fact that you have this um CBOS technically, but then you have the SD there. So because you have the SD there, then this is if we're then looking at internal ranges, then there's one, two, three. So because there's one, two, three, then this is the first time that's breaking. So that's CBOS. So you have high, low retracement. So that's like the counter argument to what I'm saying. Feel me? But yeah, it's kind of it for that. Last thing. Uh let's see. Last thing, let's look at this. You guys see this working out? Do you guys get why DXY went up last week? This be last thing for today. Do you guys see? Do you guys like do you guys remember the chart I've been showing you guys for like months? Where is it? Um do you guys know why this went up last week? No, bro. Think bigger. Think bigger. Bro, we've been saying this for months. Like, this is January. Like the monthly, the monthly candle. Like we've been saying this for a minute. You feel me? Like seeing this work out now, perfect. This is perfect. Like this week's last week's closure, perfect. So next week, I mean, I would love to see like the ASP taken and then have a transition. And then yeah, we're going here next. Like because now that we've seen like the turbulence, I want to see this. I want to see this again. I want to see that again. You know, worst case scenario is like we have like a bearish candle, and then next week for next week's close, and then that would kind of halt my bias a bit, because this would be considered a sweep. But I mean, if you're looking at it internally, nah. Like even if we like give a move here, that's fine. Take the liquidity by all means. Take it. Like take it. Give me something better. Then give me a transition. Then we're lit. You know, that'd be perfect. And that goes across the board. Like EU, um, looking bearish, looking very bearish because of this unwillingness to go higher. Now we're going lower. So I mean, unfortunately, this one looks more bearish than the X1 looks bullish. So yeah, I would have wanted to see something this like yesterday or today, maybe even early next week. Like give me a little push up. Like let's take these highs out. Take these highs out. And then have like a divergence with like DXY where DXY takes the low and EU takes does not take the high or something. And give me the move, That would be cool. But yeah, pretty cool, pretty cool. The weekly's closed. So yeah, this one looks bearish as well. I mean, like I said, I want to see a little pop up next week, and then that's like margin, full margin, full margin, full margin. Not actually saying full margin, but you get what I'm saying. Like this is high confidence. And yeah, this one, give me this, please. Like I've been waiting for this for weeks. And like, and if we hit 4K again, like I'm probably gonna buy like some like gold coins or something. Buy some actual gold because that's like a decent retracement from all time high, 20 something percent. Yeah. And then this one, I still want to see this one die. Like I don't want to see you come back. Just die, bro. Like I'm gonna hit up my friend and be like, yo, what's your argument this time? Like, um, but yeah, I think that's it for today. I mean, the biases are very straightforward, guys. Like this week was a pause. It was kind of whack. But next week, if we get a sweep, then we can get some really good moves for the incoming week. What's this one doing? Oh, that's crazy. OFD here. This is kind of a no man's land now. Hey, we didn't break the low, didn't break the high. No man's land. But yeah, any questions, concerns, guys, before we head off? It's been a bit of a long call. No questions? Cool.